Hello, everybody, and welcome to episode number 121 of Confessions of a Market Maker. I'm your co-host, Ray, aka All Day Ray, aka Cannoli Fingers, and I'm joined here by my brazen co-host, former market maker of 20 years and current day retail trader. He's one of the last of the Mohicans of the now infamous House Street, the man who used to squat 6 plates, then smoke a cigarette afterwards, the silverback of House Street. JJ, how's it going?
Good, brother. How you doing? Very auspicious day today.
It sure
Really
is. It
stoked
sure
about
is.
it.
Absolutely, man. And our guest today is a former product manager at Facebook and Instagram, a graduate of Wharton and was a Forbes 30 under 30 honoree, chief executive officer of Bitwise Asset Management, and co-founder of the 5-year-old firm. Bitwise is one of the world's largest and fastest growing crypto specialist asset managers. The firm is known for launching the world's first and largest crypto index fund and pioneering over a dozen investment products, crossing 1 billion in assets under management in 2021. It is now home to the Bitwise Bitcoin ETF, symbol BITB. Of course, our guest today is Hunter Horsley. Hunter, how's it going, man?
What's going on? It's great to be with you, Ray, JJ. 6 plates, JJ. How about that? That's impressive. I like that.
That's
Ray,
rough.
how many plates you pull off?
Oh God, Hunter. I mean, I could get three. I know I maxed with three on each side.
Now, are they tens though? Are they tens?
Oh, Hunter, come on, man.
Ouch.
Oh
Ouch.
Hunter, come on. Why are you gonna do me like that? No,
man.
no, I had four.
This is the
I know in high school, I played football in high school, Hunter. 45s
okay.
we did on the side, but no,
Okay.
JJ's he's a specimen, Hunter.
Is that right?
Yeah, offensive lineman-esque, former bouncer in Vancouver.
Wow.
Yeah.
Wow. A man of many talents.
Yeah, I'm pleased to have you with us, and we're very happy that you're gracing us with your presence. I came up through the sewers of the penny stock industry. You went to Wharton, so we're very appreciative that you're with us today.
Yeah, but I work in crypto now. So I spent many years as an exile. We've been in the crypto space since 2017. So it's come a long ways, but certainly not the most glamorous space, at least for several years there.
Yeah, well, it might be changing. Since you bring that up, Hunter, you said yourself as like an exile. Did you get like some backlash or people like looking at you sideways when you moved over to the crypto space?
Oh, absolutely, absolutely. So when we got going, Bitcoin was maybe around $1,000 a coin or $2,000 a coin, and even today, of course, people are unsure about it. But back then, I think people were really, really uncomfortable with it. People would compare it with trading cannabis stocks, or pick your analogy. There's actually a moment in 2018. So we got started in 2017. For those who are familiar with the crypto market, historically, there's 4-year cycles. The third year of the cycle, it peaks, hits an all-time high, and then usually has consolidation in the fourth year. So 2017 was sort of an all-time high year of that cycle. Touched 18,000, I think, in December of 2017. And we had launched the first cryptocurrency index fund that year, but just started the firm. And then in 2018, at max drawdown, Ethereum was down maybe 95%. And the crypto space was not embraced. The crypto space still has a long way to go, but it's come a long distance since then. And I went on Bloomberg Television at some point in 2018, and the anchor asked me if I would be trying to get my job back at Facebook. So that was sort of the state of the regard that crypto was held in back then. It's come an extraordinary distance, but yeah, wasn't the case when we got started.
Yeah, well, shout out to you for sticking with it, sticking your convictions. I'm sure this is a good feeling today. Congrats on the approval. I saw you guys first. Well, I don't know if you first applied in 2022 to the SEC, but it got rejected for a spot ETF. What was their reasoning, the SEC for the rejection?
Yeah, absolutely. We've been working on a Bitcoin ETF actually since before that. We made our first ETF filing in 2018, our first Bitcoin ETF filing in 2019. Had filings rejected twice over the year. Have met with the SEC more times than I can count. And while the Bitcoin ETFs have been rejected, we have launched other products. We launched BITW, the largest publicly traded cryptocurrency index product in the US. We launched BITQ, which is a crypto equity product, first Ethereum futures products. But as to the Bitcoin ETF journey, the nature of the concerns, and the SEC was rightfully wanting to make sure that something like this was thoroughly diligenced. At first, it was there were a lot of questions around qualified custody, so how the Bitcoin would be held. There were questions about the size of the market in terms of the liquidity. There were questions about market manipulation, and over the years, that really honed into a focal point of a conversation about market manipulation. And so that was the focal point in the most recent rejection. And that was the perspective that changed in the approval that took place this week, was them finally saying that they were in a place to approve it. So, but that was those are some of the sort of key topics that they were investigating. We did hundreds of pages of research for them, statistical analysis, review of academic publications on the topic. So it's been a really long journey.
Yep, excellent. And just a cool sidebar I came across when I was prepping for this, just for the listeners that didn't know, I didn't know, but Naval Robnakant is a founder and a chairman. Naval, pardon. Chairman of Bitwise. That's pretty cool, man. You've known him for a little bit?
Yeah, no, yeah. Naval was I think the third investor in Bitwise. He's been involved since 2017. I was chatting with him yesterday. He's a brilliant person. He's not the chairman or the founder of the company, but he is the chairman and founder of AngelList, which is another really well-known firm. And he has been really ahead of the curve, I would say, in the crypto space. So we were incredibly excited to have him as an investor early on, and an extraordinary individual.
Excellent. And just a shout out to sponsors of the podcast. Any listeners that have the skills to pass an evaluation can become a prop trader fully funded by either Apex or Top Step Funding. Our own micro e-futures trading community has many members who are now fully funded. No need to trade their own money. Keep 90% of the profits. To learn more, you can visit our website at microefutures.com. And while we're on a crypto themed episode, we also have for years, we've had a cryptocurrency trading channel, which I am heavily involved in personally. So for those of you who are crypto traders or investors, new and experienced, you are welcomed. Hunter, here on Confessions, we like getting to know our guests a little bit. And I know, went through your previous careers, schoolings, etc. But could you just take us on a brief trip on the road traveled from you becoming, from where you started your career to now being CEO and co-founder of Bitwise?
Sure, happy to. I'm from California, the Bay Area. Went to school at Wharton for undergrad. Knew that I was very interested in business, and I actually dropped out of Wharton undergrad for 2 years to be the first employee at an ed tech startup, which is an amazing experience. Went back, that company got sold, went back to finish my degree. And then after graduating, went to Instagram and Facebook. And from there, left to start Bitwise. And I've been, at this point, I think working on Bitwise for maybe 7 years now. So my background prior to Bitwise was on the technology side, as a product manager. So product manager at a tech company, which many of your audience may be familiar with, works with software engineers, designers, and business counterparties or counterparts, excuse me, to build build the actual software, the applications, the products. And I can talk a little bit about what we saw in crypto that drew us to it. But as it pertains to Bitwise, we've tried to build a firm that is a specialist in the crypto space. And to me, that means you have to combine understanding of software. When you're investing in Bitcoin, Ethereum, these are open source software projects. And if you're investing in real estate, you might be interested in zoning or in architecture, building materials, you name it. We want to have that type of expertise in software because of this asset class. And then, of course, we have people with technology backgrounds, Facebook, Google, Slack, et cetera. And then, of course, asset management backgrounds, BlackRock, Millennium, you name it, to sort of create a combined whole that can help investors understand and access the space. So that's a little bit of the DNA of the firm, and that's my story. Today, I live in San Francisco, and the firm is split. We have an office in San Francisco and an office in New York, and we're about 63 people.
Cool. And so yeah, you brought up how you could like bridge the gap for us. So where did the idea? Well, let me first start with this. When was the first time you heard about Bitcoin? In your initial thoughts.
Yeah, I came across it in maybe 2013 or 2014. I think it really got on the radar of a number of people in the technology community. And I bought some, but I didn't think much of it. I thought it was an interesting project and bought it, but sort of forgot about it, to be honest. I actually couldn't even remember I bought it. I did later find where I had bought it.
Okay, good.
So no concerns there. But that's how I encountered it. Just the enthusiasm of people in tech, and then later, I think that there are a few things that believe it or not, I think technology people. One of the things that I think is so interesting about public blockchains and crypto and Bitcoin is that it's sort of like this prism, and depending on the background of the person, they see different things in it. Sort of a different color comes out of it. I think people with financial backgrounds often see a new alternative asset class, maybe a new currency. They see volatility and low correlations, maybe a new payment rail, maybe a new settlement layer. There are people with a more, I would say, philosophical or social perspective on it, and that's sort of a libertarian perspective. We want less government, or a distrust for central authorities. And then there's a technology perspective on it. And the technology perspective, which is the one that I was originally looking at it from, is that every so often, maybe every decade, you get a new technology platform, a new computing platform. And that's computing platform is not a phrase that we use often in day-to-day life, but everyone is familiar with what a computing platform is. In the 80s and 90s, that was the personal computer. In the 90s, the internet. Then we got the mobile phone. And then in 2009, Bitcoin was an idea that hatched into a new thing. And I think people would say today that maybe AI is a new platform. And to people who are working in technology, there is a pretty common pattern or journey that takes place when a new computing platform is introduced. Usually it starts with a new capability. So back in the early days of the PC, Steve Jobs and Bill Gates said, we're going to put a mainframe in every home in America. And you'll be able to type on it and save files. And people said, well, why would people want a mainframe in their home? And the best thing they could come up with was that people would use it for recipes and balancing their checkbook. That was their vision for what the personal computer would be used for. And everyone was like,
well.
yeah, there you go. And of course, I'm drawing a parallel to crypto. The first pass that many people have in crypto is great. It has these new capabilities, but what are people going to use it for? Then what needs to happen is you get a demonstration of those capabilities, and then developers have to show up and start building applications of those capabilities. Useful ways of incorporating that into people's everyday lives. And of course, on the PC, we got spreadsheets. We got email, we got PowerPoint, we got the web browser when the internet rolled around. So that then gets a flywheel going where people want to use the new computing platform because of the usefulness of the applications, and that attracts users, and then you get a flywheel. The same thing happened with the iPhone. The iPhone came out, I believe, in 2007, and pioneered a bunch of new things, but only sold 3 or 3.5 million units in the first year. And I think many people, myself included, had a BlackBerry and said, "What do you need a smart? What do you need this for?" But it had a GPS, it had a camera, it had a touch screen, and developers got to work. And over time, you've got Google Maps, which required a GPS and the ability to take it with you to the curbside. It had a camera, which allowed Instagram and Snapchat and the like. It enabled the ability to do things in commerce like Apple Pay and Venmo and PayPal. But those things happen over time. Uber, of course. And those applications attracted people to the device, which grew the user base of the device, which made it more appealing to developers to build more applications. And then those applications attracted more people to the computing platform. So at risk of feeling like we're down on a tangent, to bring it back to my journey with crypto, if you have a background in tech, you're familiar with this pattern of seeing a new computing platform and knowing that the trajectory and journey that can go on, and knowing that if people just complain that the new computing platform doesn't have enough applications, that is not necessarily an indication that it won't in the future. What you would need to see is developers coming in to do that. And so I think a lot of people in tech sometimes have this inexplicable conviction on the space. They're so excited about it, but they can't seem to tell you why or explain to you why they're so excited about it. They're just excited about it. And I think it's that intuition. So that was one of the things that we saw in it. And, there are a few others, but it doesn't happen that often. And we said, if it's not guaranteed that this is what we think it is, but if it is, it would be a very meaningful thing to build a company and be a part of the trajectory of a new platform.
That was cool, man. That was awesome. You said a lot of intriguing, insightful things there. I really like what you said with people look at Bitcoin, through the lenses of what they see out of it, and like that overlap of like the logical, the technical, the financial. Yeah, that's really cool. I never thought of it in those terms, and I think I kind of like it for all three of those.
For different parts resonate with different people, and it's also part of what makes the space so confusing. I would say sometimes if somebody who's looking at it from a technology perspective talks to somebody who's looking at it from a financial perspective, they're talking past each other. They're just talking about completely different things. Or somebody who's talking about it from a social perspective, a libertarian perspective, talks to somebody from a technology perspective. Maybe the libertarian person hates that venture investors are buying crypto assets and consolidating ownership. Whereas the technology person says, this is great, this is funding developers, and developers build the applications, and that gets the flywheel spinning. So it's, I think, one of the things that is beautiful about the space, but also creates so much chaos, is that depending on the perspective someone is coming from, they sort of see and talk about different things, and they're pattern matching to different things as well. If you can see all those perspectives, like you, Ray, I think that there's a lot to love, but usually people are coming at it from one or two of the perspectives.
Sure. So Hunter, I had to ask if you've had any thoughts or comments, or what was going through your head when the SEC Twitter got hacked. I guess that's what they're saying. Yeah. So what were you thinking?
Yeah, we've been in the space for so long now. I mean, 2017 was ICOs. We lived through the BitMEX crash in 2020. Of course, all of the developments of 2022. My rule of thumb these days is that whatever the most bizarre thing is, that's the thing that will happen. So I was simultaneously, annoyed and, in a way, existentially unsurprised that the weirdest thing that I couldn't have possibly imagined happened. It seems to just be a recurring theme in this space. But it was
not just in crypto. And before people start beating up on crypto, let me remind you, I can't remember exactly what year it was. I remember when BlackBerry, because we were talking about Blackberries, somebody put out a news release that they were going to be acquired after hours, and the stock ran like crazy. And then later the company came out and said, no, it's not going to happen. It was research in motion at
Wow.
the time.
Yeah,
And
research motion.
and after that, nobody heard anything about it, but somebody got to dump a really nice position into that buying.
Mm.
So,
Wow.
when people say, "Oh, crypto this," like I've been around equity markets for 30 years, and I've seen some pretty crazy things happen.
I
And
bet.
so, that and of course, if you looked at it, a year later, there was no SEC, there's no enforcement actions, there's nothing, there's no FBI investigation into it. It just kind of disappeared. But for a
Hmm.
brief 45 minutes, somebody got really loaded up and they dumped into that buying on the acquisition news. And it was a completely false. I think they had hacked the PR Newswire account for Research in Motion and put out on the wire, and
Mm.
that's traditional equity stuff. And so, before we start, beating up on Bitcoin people, I think, the older crowd should kind of look in their own backyard. It's not
Mm.
exactly the cleanest backyard, you
Yeah.
know?
Yeah,
Yeah. I think that's a good example. Yeah.
it is. It is. So I think in December we had on James Seifert. He's been covering this BTC ETF, doing a great job. Shout out to him over at Bloomberg. But just as a refresher here, Hunter, what were some of the specific factors that the SEC was considering into their decision?
Yeah. James does a phenomenal job on the Bloomberg ETF intelligence team. I'm a fan. He and Eric Balchunas over there have covered it for years, actually.
Mm-hmm.
The earliest filing for Bitcoin ETF was 10 years ago, and Eric Balchunas, who works with James, tweeted about it. So they've done a phenomenal job, and in the weeks leading up, I think have really been on the money. And for those who remember, this summer, I think they made a call that they expected an approval with maybe 90% odds or something like
Yeah, they
that.
did. Yep.
I think that they get to take a victory lap on that. So uh, the recent weeks have really been for issuers about addressing feedback from the SEC. So there have been a variety of topics in December and November that were particularly in focus. So there were the existential topics that I mentioned previously, which were, does the SEC even think it's feasible to consider approving these things, which qualified custody, liquidity, market manipulation. On the existential topics, we over the summer of 2023, we saw the SEC start to engage in a way they had never engaged ever before. And that signaled, I think, to us and other issuers that they may have gotten comfortable with some of those existential topics. And we're now gonna do the work, sort of blocking and tackling of evaluating filings. And to make that more concrete, the SEC for many years would not give feedback on S1s. So for these Bitcoin ETFs, there are two filings. There's a 19B4 and an S1. They're actually overseen by two different divisions of the SEC. The Division of Trading and Markets oversees the 19B4, and the Division of Corporation Finance oversees the S1s. Historically, because the expectation inside the SEC was that trading and markets was not going to be existentially comfortable with the 19B4s, the S1s were not even really looked at. The Division of Corporation Finance said, we're not going to waste our time on these if we know that trading and markets is not going to be comfortable with the 19B4s. And so when corporate finance started to engage with the S1s, that signaled to the issuers that something may have changed here, and that they may actually be open or even thinking that an approval is possible. So that was sort of the area of focus over the summer, and then getting into the fall, and particularly in November and December, there's a lot of fine-tuned discussions, and the key topics were: would the ETFs be cash or in kind created and redeemed? And how would forks and airdrops be handled? And how would trading be handled? And of course, a lot of other things. I mean, there were dozens of comments that we responded to, but those are some of the key and most interesting ones that involved a lot of back and forth. Some of that is a little bit in the weeds of how ETFs work, excuse me. But those are three of the things that that we're absorbing a lot of the dialogue over the past maybe 8 or 12 weeks.
Cool, cool.
Cool.
JJ, I know you had some questions behind maybe some of the mechanics of
Definitely.
this.
Yeah, definitely. I'm a custody clearing settlement guy. That's that was my job as a trader, to understand the plumbing underneath the system. And I'm fascinated because you'd see, I have never, full disclosure, I've never traded Bitcoin, and because I was not comfortable with custody and clearing and firms going, I didn't know which was the good firm, which is the bad firm. Then you'd see things like FTX and things like that. And so I just kind of stayed away from it. Now that it's been completely legitimized and you have, like, your firm's BlackRock, these people stepping in, they're not going to get involved in something that's fly by night. So talk to us a little bit about custody now. Your custody is like Fidelity digital assets and
Yeah,
that sort of thing.
sure.
I read that some of the ETFs that are getting fired up now are being the custodies with Coinbase.
Yeah,
Um,
I'm happy to chat a little about the custody dimension. So because these are bearer instruments,
mhm,
custody is extremely important,
yeah.
and that's different than a security. It's extremely important. Custody has developed a lot over the last few years. When we
Hmm.
got started, it was actually very common, even for funds, to self custody, meaning they have a
Wow.
solution maybe with USBs or
Yeah.
biometric devices in a bank vault, or sharded and broken up over multiple locations. Um, and if you fast forward to today, the custody landscape is really developed. So what is the state of play in custody today? Today, in general, on the institutional side, there are a few qualified custodians that are regulated as
Yeah.
banks by states with trust charters.
Got it.
Those are Coinbase Custody Trust Company. That is a
Mhm.
subsidiary of Coinbase that is separate from the brokerage, regulated. They have capital controls. They have surprise exams. Um,
Uh,
they are the largest Bitcoin custodian. As you said, JJ, there's Fidelity Digital Assets. There is a firm called Anchorage, which actually has a federal, a national bank charter. They're the only
oh,
digital
nice.
asset custodian to have an OCC bank charter. Yes. There's Gemini. There's BitGo. And I'm sure that I'm forgetting one that is embarrassing to
Well,
forget. But those are
and
those are some of the names. Yeah.
yeah, I see the old the old guys in there, Bank of New York Mellon and Brown Brothers Harriman. Um, that,
Yes.
that's
So
interesting.
yeah. So and a lot of the traditional custodians have explored projects to introduce digital asset custody, but none of them operate as a digital asset qualified custodian yet today. Their
Got it.
role in the Bitcoin ETFs is as the custodian of the cash,
Got it. Okay.
and as the transfer agent, the administrator. So we work with Bank of New York Mellon on BITB, the Bitwise Bitcoin ETF, and they're phenomenal. And they're very forward thinking about the space, and a great outfit. On the digital asset side, of the 11 ETFs, almost all of them use Coinbase Custody Trust Company as the Bitcoin custodian today.
Okay.
Uh, Fidelity uses its own custodian, and I believe one uses Gemini and one uses BitGo. But the vast majority use Coinbase today, and that could evolve over time. Of course,
Mhm.
additional custodians could be added, but Coinbase is definitely the big winner on the custody side out of the gate here.
Great. And on the trading side, with institutional trading desks, now, Bitcoin's been around for a while, so I'm sure you guys have, familiarized yourself with, the order flow and things like that. Can you tell us a little bit about how the trading operations run? I'm fascinated by this stuff because it's a new product, and, as someone who's taken companies public, I love new products, so I find this fascinating.
Yeah, absolutely. I think this is a very, very interesting topic. Of course, I probably think everything is interesting as it relates to Bitcoin ETFs and so maybe just as background, Ray, I really appreciated your introduction. You mentioned that we manage over 15 different investment products today. We manage over $1 billion of crypto assets. We only do crypto. We have a multi-strategy alpha strategy. We have ETFs. We have private funds. We have separately managed accounts. And I say all of that to say that managing and trading a portfolio of crypto assets is not a new project for us with the Bitwise Bitcoin ETF. We've been doing that for many years, and I'm really proud to have a track record of excellence around that. So to talk specifically around the trading with the Bitcoin ETFs, the way the Bitcoin ETFs work is what's called a cash creation. Basically, cash is sent to the trust in order to create new shares. Then the portfolio manager of the ETF, the trust, has to buy Bitcoin with the cash. There are generally two main methodologies, and they're slightly different, that have been described by the different ETFs. One is a methodology that involves over-the-counter trading partners. The other involves today Coinbase Prime. So Coinbase, this is separate from their custodian. They have a Prime services that can execute trading on your behalf. So in 2 or 3 of the products today, they take the cash in and then they execute it through Coinbase Prime. In many of the others, they have the OTC path where they take the cash in, they go out and get bids from the OTC, from the over-the-counter trading counterparties, and execute at the best price. The Bitwise Bitcoin ETF, we have a lot of relationships from doing this for a long time, has the most OTC trading partners signed up with accounts in our S1, 5 disclosed in our S1, which is the most of any ETF, which allows us to access as deep of liquidity and prices as possible when we have to go buy Bitcoin for the ETF. And then as a fallback, if we can't execute through the over-the-counter markets, we can execute through Coinbase Prime. So that's the setup for us. I think it's a very important detail of these products. I think for many people, it's a little bit out of sight, out of mind. But there is some real variation between for instance, there is an ETF trading today. I won't mention it, but that has only one liquidity source. They have an account with one over-the-counter trading firm, and they have to buy their Bitcoin from that firm as it stands in their S1. They can, of course, add additional relationships, but that is materially different than being able to go out to 5 different trading partners and get a best price.
Yeah, because I mean, as someone who's executed size trades before, Bitcoin's got only 26 million, 27 million coins. So liquidity, I mean, when you have these big players stepping in with, large orders, I'm fascinated how the order handling is going to work and how they're going to access liquidity, and how do you get a cost basis of some size at a decent price without running the market crazy. All of that stuff. And of course, you've got your coders and your algo guys who are way smarter than me, but I'm just fascinated by that whole process.
Yeah, absolutely. Our portfolio manager here managed $250 billion at BlackRock. She was there for 20 years. She's been managing portfolios here at Bitwise, and we have a team around her, of course. But it's an important and serious task. I mean, every basis point matters when you're executing. You have to navigate the liquidity. We've had to trade through bear and bull markets where the liquidity environment can change, and making sure that you have access to as much liquidity as possible is hugely important, as you're saying, JJ. So we're very attentive to that. We think with the Bitwise, I think the headline on the Bitwise Bitcoin ETF is that it's the lowest cost ETF in America. It has the lowest management fee. We're very excited about that. Under the hood, I think we've constructed a very robust product here. And sometimes I think those details, like the trading, are less obvious. Many people are looking at the ticker, BITB, they're looking at the fee, and not coming through the prospectus. But I'm really proud of the underlying construction and some of those features that we're discussing, which I think are very, very important to your point, JJ, both in general, but also if you have moments where you need to access a lot of liquidity at once, or you're in a market that's under stress.
Well, that's really cool because now, because to the end user, it's going to be seamless, and that is the product of all your hard work, and
Yeah.
that's really cool. If
Thank you. I think another thing that is really exciting about BITB is that, again, it's a publicly traded ETF. It has a management fee of 20 basis points, and we're waiving the fee for the first 6 months up to the first billion.
Nice.
Even for someone who wants to trade, maybe they're not a buy and hold investor. There's somebody who wants to take views, put on positions. You can access all of those features. Us navigating the best prices in OTC desks, us getting audits done by KPMG, us having the best qualified custodian. You can sort of take advantage of all of that robustness and trade Bitcoin. I think extremely conveniently versus, I think for many traders, historically, they felt they have to open a Coinbase account, or they have to open a Kraken account, or they have to open, one of these others. But with ETFs that have spot Bitcoin under the hood and a management fee like 20 basis points, I think that there are a lot of merits to using that instrument. So I think it's very exciting from that perspective as well. More people can take advantage of this. Yeah.
Hey, if you ever need an executing trader, I'm your guy. I'll throw my hat in the ring.
Yeah,
right on.
What's cool too, Matt. Like the fees is significantly less than a few of the others. I know I was looking at because I think there's about 11 ETFs approved, I believe, right? 11, yeah.
That's exactly right. The highest fee. It was fascinating to watch. I mean, issuers changed their fees, I think, 3 or 4 times before they finally launched. And the highest fee today is 150 basis points, which is,
wow, okay.
That's 6, maybe 6, 7 times more than our fee for a very similar instrument that you're getting. So there's quite a range on the ends of the spectrum, and then there's with 11 issuers, there's almost every point in between.
Yeah.
So it was fascinating to watch different issuers make different decisions on that.
And I think the other cool feature that I saw that you guys are doing, especially for people who believe in Bitcoin and believe in maybe go back to like the ideology of it, that you guys are donating 10% of the profits of the ETF to open source development. Do you want to talk a little bit about that?
Sure. Yeah. Thanks for mentioning that. I think this is one of those things that matters to some people and is a snooze fest for other people. I mentioned before that we're trying to build a specialist for the space, and that means both understanding asset management, capital markets, fiduciary responsibilities, inside and out to the utmost degree, but also understanding the underlying ecosystem of developers and open source software. Our view was, if Bitcoin ETFs are going to be very successful, then the people who are building Bitcoin should also benefit from that. That's good for our clients. If we have clients who are investing in Bitcoin, they want Bitcoin to be successful. And a component of that is making sure the developers continue to maintain it and enhance it. So we wanted to create the best product for the space. And there are these organizations that help find the developers doing the most meaningful work and valuable work and help fund that. But they have trouble sometimes. Maybe trouble is not the right word, but they need to raise funding in order to fund those. Bitcoin doesn't pay salaries to anyone. So if you want a developer to do work, somebody's got to pay that bill. And so we can contribute to that in this way. And an investor in BITB is through that feature, helping facilitate the hygiene of the space. Now, it's important that we're also the lowest cost product. So I don't want to convey that we have some really high fee and that's going into the pocket of developers and we could have offered a lower fee. We're offering the lowest fee of any Bitcoin ETF, but we also have this mechanic that benefits developers, which I think is a fantastic thing. So that's OpenSats, Brinks, and Human Rights Foundation. For those who are familiar with the open source development community, we've committed to donating 10% of our profits from the ETF to those organizations for the next 10 years.
Yeah, excellent. That's awesome, man.
That's wonderful.
Yeah, it's a real neat thing that you guys are doing. I wanted
Thank you.
to, I want to, I'm sorry, JJ, did you have something else?
No, no, go ahead.
Oh, okay. All right. I thought, this would be an interesting note for the listeners. They might find this intriguing. So this quote I'm going to read, Hunter, it's from, your guys' CIO, Matt, Hogan. Am I pronouncing it
Yep,
correct? Okay,
exactly.
Hogan. Yep, Matt Hogan. He says if you want to gauge where crypto is going, you need to talk to the professionals who control roughly half the wealth in America. The big takeaway from these advisors this year is that for all the hoopla surrounding the potential approval, well, the now approval of the spot Bitcoin ETF, it doesn't appear to be priced in. There was a lot of talk prior to this. Is it priced in? Is it not? I was kind of thinking it was, but it seems that you guys are of a different mind here. Do you just want to just talk a little bit about that?
Yeah. We do a survey of financial advisors every year. Advisors in the U.S. manage something like 20 or 30 trillion dollars, and we serve thousands of them across the country, and really enjoy that and feel grateful for the opportunity to do that. Advisors, we just completed our most recent survey. 88% of advisors said that they were waiting to invest in Bitcoin and crypto until there was a Bitcoin ETF. That's just one market participant group. And if you just take that segment of the market, and those are some of the biggest users of ETFs, it's just impossible to view Bitcoin as having priced in the potential flows from a constituent set of that size. And that's to say nothing of the fact that Bitcoin ETFs are very helpful for retirement account, IRAs. They can be used in IRAs. They can, of course, also be used by traders and institutional investors. So that's where that point of view is coming from. Even though to some people who've been following crypto for a long time, it can feel like it's been around, the price is higher. But in reality, it's a puny space still. I mean, it's worth less than Microsoft by a factor of 2 or 3, and that's just one stock in the U.S. equity market. So there are tens of trillions of dollars that have been interested in the crypto space, but they are busy, or they're not able to download an app or create an account on an exchange. They want the same instrument or mechanism that they use for every other asset class for trading it or taking a long exposure. And they've been waiting for that to show up, and it's showing up now with a Bitcoin ETF. Now, I will say, I don't expect. You hear a lot of different perspectives, and I don't mean to suggest that I'm omniscient or have full knowledge of how things will go, but I don't expect that these investors for whom a Bitcoin ETF is really enabling, I don't expect they're all going to invest in the first 3 hours of it existing. Not everyone who buys a stock after a company goes public buy it within the first 3 hours. Busy people have a lot going on, have investment committees, have client meetings. They're not going to cancel all of that and say, we just need to figure out if we're going to buy a little bit of the Bitcoin ETF. So I don't think that those flows and allocations will all come into the market in 24 hours. But I think it's a very sizable constituent that now has a way of participating that didn't before. And I think that it's not priced in, as Matt said.
Yeah. That's awesome. Yeah, Hunter, I think, obviously trading podcasts, we're traders. One of my favorite, I guess, adages you could say is, it doesn't matter how much something's up, right? Like, I know people want to be like, oh, well, Bitcoin's been around, it's been up so much, how far can it possibly go? I mean, it's as simple as, like, if there's more buyers than sellers, like, we could just keep this real simple, right? Like, more buyers than sellers.
Yeah, I think
that's all that matters.
Yeah, with an asset like Bitcoin, where you have a relatively finite supply, demand supply is what produces price, and you have a number of reasons to contemplate that demand can be going up, and then that supply is going down, because with the Bitcoin having the amount of new Bitcoin that is minted is cutting in half in the spring. So supply is going down. There are a variety of reasons to believe the demand's going up, and I think that is, sometimes Matt likes to say, sometimes investing is complicated and sometimes it's simple.
Exactly.
And in the case of Bitcoin, I think if you believe in that setup, hard to know how things will move in any given day, but structurally you have the setup for a great opportunity for Bitcoin.
Let me just hop in really there,
Mhm.
because I mean I'm a float guy, and I mean you look at Apple, it's got 15.5 billion shares in the float. Bitcoin's only got 26 million units. Um, and with all this money sitting on the sidelines, buying begets buying. Um, and as you said, investment is made by committee now. It's not like some cowboy sitting there. Let's get on the bid. Their analysts take time. We're just coming back from the end of the year. A lot of people still haven't even sat down with their pods and started making investment decisions. So I think I'm looking at this going, oh man, these guys, the early adopters, who have got a nice cost basis, they're going to be in for a nice run.
Yeah, I think just to give an anecdote to what you're saying there, JJ, we have a number of clients. We have tens of thousands of clients across the country, thousands
Mhm.
of wealth management firms, RIAs, family offices, institutional investors. There are some of those clients that are extremely excited about and interested in a Bitcoin
Mhm.
ETF. So they set up a meeting in 3 weeks to talk about it.
Exactly.
That is what sort of
The process.
urgency and highly prioritized looks like in terms of time frame. So I think you're
Exactly.
exactly right there, where this is a structural improvement, but it's not something that's just going to play out in 24 hours. And I would also note that if you look at as an analogy, the gold ETFs, the gold ETF was transformative for the gold space. It went on a
Hmm.
10-year bull run after the gold ETF launched and opened up access
Hmm.
broadly. But in the first year, I believe it raised something like $1 billion or $2 billion, and that was an
Yeah.
extraordinary year. And the
Yeah.
next year, I think it was 2, 3, or 4, and then 3, 4, or 5. So I'm not saying that Bitcoin will be exactly like gold. We live at a different time than 2003 now. But what I am saying is, it doesn't require that $100 billion show up in the first 24
Yeah.
hours for what we're saying here to be true. So I'm extremely optimistic, and that's based on both studying history, but also just what we hear from clients and understand from the people we partner with and serve.
Yeah. And money managers are conservative. So this gives it a lot of validity because they've got the clearing, the custody, the settlement. That's all wrapped up now. And so the level of confidence is there, that wasn't before. And, because, money managers aren't paid to be cowboys, they're paid to be custodians of people's assets, pension funds, things
Absolutely.
like that. So now that that's been legitimized, look out. I'm really, really excited about it. I love new product. And
Mm,
this is very cool stuff.
That's the
love to hear that.
finance lens right there, Hunter.
Yeah, just product,
Yeah,
man.
yeah.
I love, what that's what we do. We wrap things up in shiny packages and sell it to people, right? And this is a very shiny package.
Yeah, yeah. Hunter, really appreciate your time, man. I just got a few miscellaneous crypto questions. You can answer them quickly. Um, just really appreciate you being gracious with your time, especially on the day of the approval, man. It's been great. Been really enjoying talking to you. Um, so Bitwise, you guys provide exposure to NFTs. And as someone who is very interested, I own a few NFTs. I'm curious to how your guys' NFT exposure is done.
Yeah, we have a Bitwise Blue Chip NFT Index Fund. This is a private fund. It's not an ETF. We constructed an index, and what it's seeking to do is for an investor who says, I think NFTs are interesting, either just strictly from an exposure perspective, a beta perspective, or I think that there's a new cultural asset that's emerging here in the digital realm, in the same way that you have artwork from the Renaissance era. You have Warhols and some people view NFTs as sort of a similar type of asset. We want people to have a way to take that exposure if they want to, and that's generally what Bitwise does, and why we have 15 products is to help people take the exposure in the space that they want to. To construct that index, we have to evaluate a lot of things with NFTs because this is not like publicly traded equities.
Mm-hmm.
We have to evaluate liquidity, if there's sufficient supply. Oftentimes NFT collections will be, just a few thousand units and pieces. Where is trading happening? Is there enough liquidity? We will look at sort of the what's called the floor price, the midpoint price. So, if you think about real estate Manhattan, we're not looking at the penthouse on Central Park. We're looking for the sort of the median inventory that has the most volume, and then we weight it by market cap, and we rebalance it, I believe, for that fund on a quarterly basis, and then monitor the assets on an ongoing basis.
Cool. Yeah. The liquidity for sure can be a tough thing with NFTs. But it's an interesting
Absolutely.
space. I really love it. I really enjoyed reading article you guys published on the 10 predictions for 2024. I just wanted to bring up a couple of them that I thought were interesting. So what you guys call like the killer app prediction markets. You guys are thinking more than 100 million will be staked in prediction markets. I know the prediction markets in crypto have been around for, man, I want to at least say 2017, maybe 18-ish, if I'm remembering correctly. So why do you guys think this is the year?
Yeah, absolutely. And as an aside, Ray and JJ, I'll have to run in about a minute here, actually. So
Yep.
I'm sorry about that. But have a meeting in the hour. Very briefly on prediction markets, there's a lot happening in the world. People want to take views on things like if Milei will win the presidential election. There's a presidential election coming up in the US. There are a lot of geopolitical events taking place. The financial markets, the futures markets, are a great sort of prediction market for markets themselves, because people are staking their dollars against their view, and it helps you predict rates. It helps you predict a lot of things. And our viewpoint is blockchains allow you to set up prediction markets for a whole range of long tail topics that people want to take views on. And as people are increasingly being familiar with crypto assets and how to use these public blockchain applications, and as the world continues to have a lot of sort of this long tail of topics, that will be sort of a unique application that is uniquely useful relative to anything else. And so that's where that prediction comes from.
Awesome. Excellent. And so that's going to conclude today's episode of Confessions of a Market Maker. If you guys enjoyed the episode, you can please rate and review it for us. If you'd like to join a professional and supportive community traders, you can join us at microefutures.com. Hunter, let the listeners know where they can find you and anything else you want them to know.
Bitwiseinvestments.com is our website. BITB, the Bitwise Bitcoin ETF, is our new ETF. And I'm H. Horsley on Twitter. And it was great being with you, Ray and JJ.
It was awesome, man. Thank you so much. So for Hunter Horsley, I'm Paulie Walnuts. He's the gorilla of House Street. You stops, though.